Well, hello there, ladies and gents. Great to see you again, and welcome back to Advance Your Wealth with Homer Smith. Ryan Ruff here, your moderator, but of course, I'll have Homer joining me in just a moment. We're going to be unpacking another great wealth management discussion here today. Today's really going to be a deep focus on incorporating tax-aware investment strategies into your long-term wealth planning efforts. So many of the topics, if you're a frequent listener of our show, you would know that many of the topics here we've discussed in the past have been around preparing your business for the exit and also for a transition of your wealth to heirs, maybe also the causes you care about. The strategy that we're going to be focusing on today is a strategy called private placement life insurance and how it intersects many of the key planning areas. And it's also a tool that the billionaire families and single family offices have been using for many years to mitigate taxes and, that is mitigate taxes specifically with regard to their investment portfolio. The good news is that with advances in technology over the years and the work of just some great professionals along the way, the strategy is no longer reserved for those super rich individuals that you may have heard us chat about on this show. So today, Homer and I are going to be kind of sharing with you just how he's leveraging this strategy on behalf of his clients and how it might be a fit for you. So before we get into the nitty gritty of it all, let's go ahead and say hi to the man of the hour. Homer, good to see you today. How you doing?
Hey Ryan, great to see you as well, and excited to dive into this topic as I know just working with our clients over the last few years and dealing with many of those transitions that you described. This has become a key planning component of that, and definitely looking forward to getting more information out there on it.
Yeah, this is a big one, Homer. I know you've been having a lot of conversations with folks lately about this. So, Homer, as I mentioned, a lot of high net worth individuals have had experiences with life insurance, both good and bad. And that can often color kind of their willingness to consider a strategy like private placement life insurance, or PPLI for short. Could you maybe just level set the conversation here today on private placement life insurance and give our audience a background on the structure of the insurance policy, but also how it compares to more traditional retail products that a lot of people are familiar with?
Yeah, it's a great place to start, Ryan. I'd love to kind of level set on just life insurance in general, and maybe how this fits into the bigger picture planning. So I believe life insurance is a critical component for the planning we do for pretty much all of our clients. And as we've discussed in the past, what we're known for more than anything else is helping our successful families and business owners navigate life's most important, meaningful, and complex transitions. And life insurance often plays a critical role in those transitions, as we've described. So that could be making sure the business owner and their family are protected in the case of an untimely death of the business owner, or for the business itself. If you've got really critical employees or members of the executive team, you want to protect against the untimely death of one of them and make sure there's liquidity in for the business to hire replacements and cover for that loss. And around just estate planning, successful business owners, real estate owners, at the ultimate death of the matriarch and patriarch, there can be significant estate taxes that require liquidity to come into the family so that they're not required to do a fire sale on that business or that real estate. And really, all the other, all types of life insurance are use cases for those needs, right? That you can use, whether it's term insurance, permanent insurance, private placement life insurance. They're all a part of the conversation. But really, our job is to help our clients identify which of those solutions makes the most sense. And so with private placement life insurance specifically, we just include it into the conversation with our clients as to whether it's the right fit. And it just happens to have some additional features, particularly around, some of the investment components and some intergenerational planning components that create some advantages that need to be considered.
Well, before we get into kind of the nitty gritty of private placement life insurance, let's kind of still stick at a high level here with regard to kind of general life insurance. Homer, talk me through some of the key features of life insurance that would make it kind of very useful and attractive for folks based on some of the situations you just mentioned.
Yeah, great question. Life insurance just does happen to have some advantages that are built into the tax code that make it a really excellent tool and solution for wealth and transition planning. Again, very wide use for that. And so some of the key features that I want to make sure everybody's aware of around that, beyond the liquidity. So that, there has to be a life insurance need, and the liquidity for the family needs to be the most important component of that. But beyond that, as you do get into the details of how permanent life insurance itself is structured, there's some key advantages. And one of them, the first one, is what we call the tax-free buildup of gains. And so inside of a life insurance policy, whether it's the interest, whether it's the dividends, whether it's capital gains that are earned inside of that policy, all of those gains are able to be built up on a tax deferred basis, and ultimately, if held to the end of the policy, completely tax free. The second huge tax advantage of these structures are the ability to get your distributions out of the life insurance policy in a tax free manner, if structured correctly. So you're able to access the growth of the policy through loans, or access the return of principal. So the money you put in, you're able to get those dollars out tax free. Another advantage is that the recipient of the life insurance proceeds at the death of the person insured also come out completely tax free. So these often can be significant liquidity events, and there's not a huge tax implication from those receiving that. And then the fourth one, which I think often is overlooked, is if structured as a part of an estate plan where the life insurance is owned outside of the estate in certain, mostly trust structures, it's able to then pass through multiple generations of the family without incurring additional estate taxes. So it can be tax-free on the buildup of the growth, tax-free on the distributions out of the policy, tax-free whoever receives the life insurance benefits themselves, and then estate tax-free if structured correctly outside of the estate. And Ryan, we work with some of the best professionals in the world at the structuring of these policies, which is a really critical component to make sure you're able to take advantage of all these benefits. And the reality is, like I mentioned earlier, all of these benefits are benefits of permanent life insurance policies in general. This is not specific to private placement life insurance.
Well, Homer, that's a really nice segue mentioning kind of how important the structuring of those policies are. Because you and I have had conversations about life insurance on this show, and we both know that there's been some good experiences as well as bad experiences that people out there have had with life insurance as a vehicle. Could you speak a little bit to maybe the underbelly, the issues that you're seeing within the industry, and why some families are just a little weary when it comes to getting involved in a life insurance product?
Yeah, it's a great question, and a good place to focus here is in that, when we approach a situation for a client, we're always coming at it from a big picture, holistic planning scenario for the client, where we're looking at what outcomes they're looking to achieve, and the best way to ultimately do that, and we bring life insurance into the mix when it's appropriate. I think some of the challenges that create some skepticism around life insurance and prevent people from being open-minded to a solution like private placement life insurance um, come from the fact that most life insurance that is sold by life insurance agents, who really their only product, their only solution they bring to the table for clients is life insurance. And with that, the way they're paid most of the time is the commissions that come from that product sale come almost exclusively up front. And what that creates is a lack of incentive for ongoing advice and follow up on that policy. And so I believe, most of the time those policies are sold for the right reasons. But in our reviews, when we are reviewing, especially older permanent life insurance policies, there's been a lack of follow up. The circumstances of that client have changed. The policies often haven't been funded correctly. So again, when we review it, it wasn't that the initial reason for getting that policy wasn't the right strategy or solution at the time. It's that their situations often have changed. Again, they didn't fund it correctly, and now they've often, because it wasn't reviewed as a part of their overall planning regularly enough, they might have even forgotten why they did it in the first place, which makes them question why they have this in place. And so it's a challenge, because insurance, you have the ability of leveraging the balance sheet of an insurance company to create liquidity at really critical times in the transitions that our clients see, and because of some of, I think, the way the industry works has created some of those challenges and skepticism.
Sure. I appreciate you kind of diving into that. I know that's the harder side of the conversation with life insurance.
Well, and one thing I'd add to that too, which is an
Yeah.
important factor to consider, is on the flip side, in our experience, no beneficiary of a life insurance policy, when they receive the check from the insurance company, has ever felt like it's too much and turned the check back into the insurance company. So again, I think a lot of it is not so much the product or the solution itself; it's the education and it's the ongoing review to make sure it remains a fit is the bigger issue, not the product itself.
Yeah, there comes that theme on this show of not necessarily set it and forget it mentality. Hey, Homer, all right, let's get deeper now into private placement life insurance. We've been kind of setting the scene on the high level life insurance conversation overall. Walk us through some of kind of the core differences between a general life insurance policy. I say that loosely, but also kind of the structure of the PPLI.
Yeah, so at its core, private placement life insurance, PPLI, is on the chassis of a variable universal life policy, but it adds the ability for more sophisticated investors to access more complex investments inside the policy. So typically, to access a private placement life insurance policy structure, you need to be an accredited investor, and there's certain rules around what that means. And the reason for that is some of those more complex investments that are available inside of a private placement life insurance policy come with that accredited investor requirement. So for us, and there's a lot of different structures for private placement life insurance out there, from retail to more institutional wholesale versions. The way we utilize private placement life insurance with our clients, where we think makes a pretty meaningful difference, is we actually strip out most of those commissions and fees that come with the retail products that we spoke to earlier, because we're really designing this, and obviously in addition to the liquidity needs of the family, but we're really trying to drive investment performance inside of this in addition to that. And so by eliminating and removing a lot of those fees, it's going to remove the drag on the investment performance, and it's going to allow that investment portfolio to compound at a faster rate over time. And as many people know, compounding, even at very small amounts, in addition to what they might have gotten otherwise, over a long period of time, can create tens, if not hundreds of millions of dollars of difference in portfolio value by eliminating the drag of the taxes compared to the cost of the internal structure. So eliminating those costs is a critical component to what we're trying to do inside the policy.
I love this. And well, Homer, with what you're describing, it almost seems like it's too good to be true. But there is a strategy that ultimately allows your clients to put a life insurance policy in place to provide for their future liquidity. We've talked about that before. And also provides maybe for a legal structure that can help eliminate taxes on the growth of their portfolio. What are the challenges and maybe also, the disadvantages of that structure?
Yeah, so I think anytime there's a big advantage for a structure, it also does come with challenges. In this case, in order to really take advantage of the structure, the big thing you need is time. And what I mean by that is, back to the idea of compound interest and compound returns. It takes time for that compound return advantage to build up and really start to accelerate inside of the structure. And so if these are funds that somebody's going to need back within 2, 3, 5 years, private placement life insurance is not the best structure for it. This is something you want to have where it's more, the way we kind of describe it to clients, or the mentality of it, is more of a rainy day fund. These might even be funds that the people putting the money in may never even need themselves. It's more designed for future generations or charitable intent down the road. And so it's designed to really be there for a very long period of time. Now, the flip side of that is, if they do need it, because of the way these things are structured, they can get access to their money at any time that they need at very, very low cost and almost no fees. But the idea is we want them to think about this as a long-term investment structure. Another challenge that comes with these structures is, because of the tax benefit that you get with something like this, there's also what we call an investor controlled doctrine attached to permanent life insurance policies. And again, this is true of all permanent life insurance policies, is that the policy owner can't control the investments that are available inside of the policy. And so or we might have a successful entrepreneur or investor that likes to self-manage all of their investments. That's not allowable inside of the private placement life structure. You need to have a third-party investment manager ultimately making those decisions for you. So where we see some challenges with this is that there's some professionals out there that have a disagreement on how that investor control doctrine is applied, and will work with a business owner to tell them they can actually put their business interests of their private investment or their private business inside of the private placement life insurance policy, so that when they ultimately sell it down the road, they can avoid all the tax and the growth of that business. And I think that's just a lot of risk in terms of how the IRS views investor control. And so I think it's just important to be very mindful and careful when hearing professionals advise on that. So at the end of the day, our goal when we're implementing this structure for our clients is to be as down the middle of the tax code as we possibly can. And if this structure is ever scrutinized, that the client can know that, hey, they did this the right way. We did this by the book.
Sure. And I can totally see, Homer, how this is also one of those situations where it really does help and pay to have the right team of professionals around you, walking that fine line in the middle of the tax code, as you mentioned, but also setting up the structure to be as effective as it can be. But one thing I know our audience always loves to hear about is case studies or stories where some of these different strategies we discuss are implemented in real life. Walk me through any sort of case study or example, if you will, that could be beneficial for our audience today.
I think there's a few scenarios where we see this strategy really, really be a good fit for the families that we work with. The first one, again, it's something that we spend a lot of our time on is business transactions with our clients. And often the result of that sale is going to be a pretty significant amount of liquidity coming into the family, whether that's in their estate or if they've done some estate planning, maybe those proceeds are coming outside the estate. And they've now, paid some tax, at least likely on the business. Often we work to help them mitigate and reduce the amount of tax in the sale of their business as much as we can. But at the end of the day, that pot of money itself, as it grows and creates interest and dividend and capital gains, is going to create a whole lot of ongoing taxes from the investment income over the life of those accounts. And so private placement life insurance is a great way to reduce and mitigate the taxes on the future growth of their investments. And often, because of the size of the liquidity event, they need the ability to have some additional life insurance in place for liquidity needs. And so it's a great combination of being able to protect the family and provide liquidity for future estate taxes, while also creating a much better outcome on the growth of their portfolio by not having the drag from those income taxes on the portfolio growth over time. Another area that we see it quite a bit, whether it's a part of a business transaction or just long-term planning for the family, is having these structures inside of dynasty trusts for the family. So dynasty trusts are typically trusts set up to benefit multiple generations, usually 3, 4, 5 generations that you're hoping to sustain for the family. The challenge with dynasty trusts and planning for multiple generations is that as the family grows over time, if you think of a matriarch and a patriarch, they have 4 kids, 3 kids, they each then have 2 or 3 kids, then that next generation has 2 or 3 kids. All of a sudden, this trust is designed to support more and more people. And so it needs more and more liquidity. So providing for those future needs, private placement life insurance is a great solution, not only for the ability for the life insurance policy itself to bring liquidity to the table for the family when it's needed, but then also to be able to, again, reduce the drag of taxes on the investment portfolio, which also gives a better chance for that money to sustain for multiple generations. So, a number of different reasons inside of estate planning, that's great, or inside of a dynasty trust. And then the third one that I'll mention, at least for today, there's many obviously that we can go around, is we have many clients that have charitable intent and significant estate tax liability and ongoing income tax issues. So we have a situation where there's a lot of liquid assets in the client's estate, but they've also already done all of the gifting to their kids through their lifetime exemptions on the estate taxes. So they've done a significant amount of gifting, and in their view, their kids are good. They don't need any more money, but they'd like to create a lot of value for some of the causes they care about. And so while they've got significant assets in the estate, creating taxes on their investment earnings, private placement life insurance can be a great structure to, again, mitigate, reduce, eliminate some of the taxes on the growth of their investments, while setting up a structure that's ultimately going to provide liquidity and a lot of value to causes they care about, whether it comes through making their private foundation the beneficiary of that life insurance policy, where their family and other key members of their world can be the managers of that private foundation going forward, or whether it might directly benefit specific causes they care about, when they ultimately pass away. So again, it's a really useful structure, whether this is something that's done inside of the estate or outside of the estate, to provide liquidity and also, more benefits on the overall investment growth.
Well, I mean, Homer, you've walked through countless benefits that are associated with this. Of course, like any strategy, there is its downsides. But given how attractive a PPLI plan really does sound, uh, not only just for a wealthy family, but also a business owner, what would your advice be for somebody? I think the logical next step would be to have a conversation with probably you or your team to talk through the logistics of what that would mean for them. So I guess the better question is, Homer, what would be the best way somebody could reach out to you and your team to start that conversation and see whether or not this PPLI does in fact make sense for them, their life, their business, so on and so forth?
Yeah, I think first and foremost, we need to recognize that private placement life insurance or any life insurance discussion doesn't happen in a vacuum, and really should be a part of a bigger picture overall financial review to make sure that the plan that you have in place is has a really high likelihood of getting you the outcomes that you expect it to, and that part of that review should be a review of your liquidity needs, and again, if life insurance is a fit. And so I would love to, as a part of that process, and what we do for all of the new clients that we ultimately bring on, is we do a full review of your overall financial situation and find all sorts of gaps and opportunities, gaps that need to be filled in, issues that need to be addressed more quickly, or opportunities that you're missing out on, and you really should consider taking advantage of. And so I'd love for you, whether you want to reach out through our website or through an email that we'll put up on the screen, would love to hear from you. And if we could have an initial conversation, we'd love to find out, hey, might we be a good fit? And might it make sense for you to go through this overall review to see if some of these strategies like private placement life insurance are a fit for you and your family?
Fantastic. Well, Homer, I appreciate you and your time. I know you got clients to serve, so I'll let you get back to doing that. But we'll see you back here on the next one. Have a great rest of your day.
Thanks, Ryan. Good to see you as always.
Yeah, always good to spend some time with you, Homer. And look, hey, folks, we want to take a final moment, as we always do on this show, and thank you for making us a part of your day. If you enjoyed today's discussion surrounding PPLIs, if you learned a thing or two, I know I did, make sure you hit subscribe on whichever platform you checked us out on today so that you don't miss out on future conversations where Homer and I dive into different wealth management topics and, really pull out some extractions for you and your family so that you guys can ultimately benefit from that information as well. But look, for Homer, I'm Ryan. We're going to go ahead and say so long now. But once again, we appreciate everybody stopping by and being with us today on Advance Your Wealth.